All right, welcome back to the show. Interesting song bringing us in, providing you, I guess, a little help. Not to say that you're helpless, but there's a lot of people that have questions right now. The market was down triple digits again today. Since the beginning of the year, these triple-digit swings are back. A lot happening in the market. Oil prices are down. Interest rates are low. Very confusing stuff. So there's no one better to have on here than David Reyes. He's our financial elite professional from the American Dream, our television program. You can see him there Saturday mornings at 10 a.m. doing the Reyes Report. He hosts his own radio show on 760 KFNB. And I could go through a bunch of other stuff, but I'll waste a bunch of time. So, David, good to have you on the show.
Oh, good to see you, too.
I can't shake your hand.
We can do this. How about that? There we go.
So, a little surgery on the elbow, huh?
I did. Long overdue.
What'd you
10
do?
years. Yeah, it's a long explanation, but I have about a 6-inch incision on my arm, and they did arthroscopic and moved a nerve and shaved bones, and it's called pitcher's elbow.
You know, of course, they do it right before our second ever television production of the radio show. And to remind our audience that's just joining us, we now have a full-blown, basically TV show for radio. We upload everything to craigsewing.com. We'll certainly send it to reyesplan.com. So you can recap anything that we talked to David about here today. So not to put words in your mouth, this is something I heard you say at a commercial. The market is a friggin' yo-yo. So why don't you help us understand what that means?
Well, what it means is we have kind of the tail wagging the dog right now. You've got oil prices, as everybody knows, have fallen from a high of about $107 a barrel in June of last year to right now probably around $45 a barrel, about a 60% drop. That's not healthy. Any market like that moves like that quick, that fast, is what's called a not technical market. It's not a technical market, just free fall. And so when you have markets like that, that's telling you something. And to give you an idea, from 2008 to 2009, oil went from over $140 a barrel to around $33 a barrel. So think about that for a second. We were in a financial crisis during that time frame.
Yep.
Now, are we in a financial crisis right now in the United States?
I think if you look at the market, what real estate's doing, I don't think we're in a financial crisis. I think we're recovering, right?
So that's a problem. That's what I'm saying. That's when I talk about these dislocations in the market, or this is something you need to pay attention to.
So people are getting lower gas prices at the pump. That's nice, but you're
awesome.
saying that there's an unintended consequence, so to speak.
Well, the big unintended consequence is that why is oil so low? That's the question to be asked, right? If you have a thriving economy, oil prices in a thriving economy typically are going to rise, correct?
Sure.
Because people are spending more money, they're doing more things, doing more travel, right? Problem is you have a global meltdown right now. You have global disinflation. Japan's QE is 10 times the size of the United States QE, 10 times on a GDP basis.
Wow. On
a comparative basis. You have Draghi in the European Union that's probably going to enter some quantitative easing on a serious basis. You've got the UK just announced today that they're having disinflation. So everybody's trying to rise their own CPIs, which we are too. That's part of the mandate what Yellen has is low unemployment, inflation above 2. Okay, so that's a problem. That's disinflationary. So when prices fall, it's like if you knew, Craig, that prices of a home were going to fall in the next 6 months, how fast are you going to be looking to go buy a new home?
Sure. So you're probably going to either look to sell or at least get out of the market.
Or wait to buy is worse.
Sure.
Right? So if car prices are going down, if home prices are going, that's why governments and central banks fight so hard to prop up inflation. Okay, that's one thing they're good at doing normally, and that's why the Great Depression lasted over 2 decades, because we had deflation. So bottom line is that as oil prices go, so does the market.
So I'm driving home from work right now. I have money in my retirement, stocks, bonds, 401k, however it's structured. Why should I care? Specifically, me as not even an investor, but someone who's building up my nest egg. And I'm tuned into the show. David Reyes is a smart guy. What should I do about it? Why
you should care is because we're at historically all-time high prices, not only on a relative basis, but on an inflation-adjusted basis. We've not had stock prices this high on any measurement since 1929 crash, since 2000, since 2007. One.
So due for a correction.
2, you have this dislocation with oil. Okay, you have world markets that are tumbling. So you might be driving down the road real happy that you filled your tank up for $40 a gallon and it used to be 80, but your portfolio might lose 20-30% in the next year.
Okay, so let me give a call to action to our audience. This is the first one of the show, and I'm gonna go ahead and make this very clear. If there's anything that you take from this show, if there's anything that you take from this week of shows, really tune in right now. I'm going to give you an opportunity to pull out your phone, and we're going to give you a free review. All right? Now, I don't say free lightly because David can charge thousands of dollars for this, but as a listener to the Craig Sewing program or a follower of the American Dream, David will give this out to a handful of our listeners and viewers. If you would like a free review to just see if there's any holes in your game, if these oil prices could hurt you, if you're not well diversified, or maybe something as simple as your 401k is getting eaten away by fees. You're not hedged against inflation. There's a lot of risk right now. David just mentioned we're way overdue for a 10% correction. Not only is it a good time at the beginning of the year to do it, now is the time to do it. So if you care about your financial future and you want to take this opportunity to save, spending thousands of dollars to get a second opinion, I'm going to make it very, very simple on you. The first 5 people that text in right now, David's going to do this review for you. If you text free review, you're going to get a response from me asking for your name and email. Then I'm going to introduce you. And then what you do with that is totally up to you. But take this opportunity to send a text message. If it's easier for you, call and leave a voicemail. Text 619-846-9333. Again, it's a good time because it's the beginning of the year. But with all the risks in this market, now is the time. I could not give a stronger piece of advice in our show today or even this week. Text free review to 619-846-9333. 846-9333. Text free review. I also encourage you to learn more about David at reyesplan.com, Reyes.